Hi everyone, and welcome to the EcoInvestment update for Sunday, March 13th. I know I didn't have one last week. I thought about the last Sunday. I thought about the events of the week before, and some weeks, I just don't want to come in here and flap my lips if it's like status quo. And one of the things that I've mentioned for the past month here is I've liked the composure of the market. We could be in the eye of the hurricane, yes, but you never know what something is when you're in it. Only with hindsight are you able to see where you went and where you were at that time. So the deal is we are in the market here and have been since about the 16,000 level, or about 17,100 on the Dow. How far will it go? Well, you know what? Who knows on there? When it starts to exhibit certain signs traditionally found with something that's like a topping out process, we'll know either this reflex rally is over after a horrendous December and January. It will run its course and will turn down again, or we will be reverting back to the original theory that I started with over 2 years ago, which is that low interest rates create a bubble. And the only thing that's going to ever trim and take down and cut down a bull market is rising interest rates. And if anything, we may have actually passed the low point, the lows of interest rates. So why do I say that? Because of the liquidity that the Feds pumped into the market. All that liquidity, all those QE1, 2, 3s, all the banks have been liquid, all the bank debts have been liquidated. They've been put in. The government's taken over a lot of that debt, and we're finally reaching a point. Although there's not really much in the way of viable new industries and investments out there, it's never stopped people in the past from taking their money and chasing things higher. And the stock market to people could look like prime target number one. Virtually anybody alive today has never seen a rip-roaring bull market in stocks. It's unknown to people today. What's a rip-roaring market in stocks? It's like the one that was typical from 1928 until the crash of September of 1929, when the market was just on a tear and every day just seemed to be up and up and up, and the shoe shine boys were in the streets talking about it, and Wall Street was all of the conversation, all of the talk and cocktail parties was stocks. Stocks were nowhere near that point right now. Nowhere near has this market captured the imagination of anybody except really yours truly on a weekly basis. So we have to be prepared for the possibility that we have created a bubble just like the Japanese created in the late 80s through the early 90s, when the Japanese market was well over double what it is today, double and then some. Could it happen? Of course it is. One of the things that you want to do is you want to stay nimble. You want to understand what the realities of the current situation are. And although at one time it looks like, well, maybe this is the shit hits the fan episode in a market, you got to be nimble enough to realize when the climate kind of changes a little bit, like it did 3-4 weeks ago, and we started biting on the long side of the market again because it looked like it had been pretty sold out and retested that low of August. Well, sometimes you've just got to be able to be nimble and of such a mind that you don't get married to a way of thinking. What's interesting to me is when I think about the possibility of going back to the grand scenario of the runaway bubble bull market, because the interest rates are so low scenario, and I start envisioning what that looks like, and people scratching their heads within the context of an economy that's really not that good underneath it. It's been supported by all this robust liquidity that's gone in, but left of its own, there's still so many weak spots, particularly in international trade, that are growing now and impacting a lot of these Fortune 500 companies. So Am I still in the market? Yes, I am. Am I going to cut? Am I going to cut and run if we take out that 15,500 level? You bet I am. I may cut and run even before then. But I'll tell you now, I'm enjoying the ride up, and we just don't quite know whether this is going to result in a new all-time high, and then it's off to the races to God knows how high. People laugh when I say the potential of doubling from here, but it happens in markets. You know, it sounds loony. You know, but they said the same thing when soybeans went from $3 a bushel to $14 a bushel, almost unheard of. Okay, bull markets overshoot, so we shall see. Are we in a bull market? No, I still think that we're in a bear market rally. We would have to exceed at 18,300 level, the all-time high on the Dow, for really to be confirmed on a bull market. So we're still in this never land of having our convictions turn one way one day and one the other, but we're in a very tight little range where we do that. So we're not losing anything. We're not really gaining anything. We're not losing anything, but we're keeping our eyes open and we're staying sharp, and that's what you need to do too. As you've seen, gold and silver really refuse to budge much. They're still being well supported there, so there's something going on there too. So, okay, hopefully maybe you took the advice from a month ago and saw that as the time to do a refi on your house, because it could be a long time before we see those kind of rates again, or maybe it could be that negative interest rates come back and come to the United States in a big way. Stay tuned. It's always exciting to see. Thanks for watching, everyone.